Good morning, good morning. Welcome to our weekly market update. It's Monday, June 22nd, and we'll be with you with the short market review. We're going to check together the geopolitical news, political news, and economic data. What's happened last week, what's happening now, and what we are expecting to see for the week ahead. Looking generally to the market, current situation is like this. The geopolitical tensions, two main focus of the world focus of the, or we can say the news focus is one in the Middle East, the Iran war. Another one is geopolitical tension and the war between Russia and Ukraine. We know that in recent days, Ukraine attacked recently in they had an effective attack actually they had in Moscow, while Russian and ASEAN meeting was held in Kazan City, a little bit farther, not a little bit, was like 4 hours flight, something like that, farther than the Moscow. Anyhow, in that east part of the Russia, near to the Asian, mostly to the Asian side. Anyhow, the situation was just like got a little bit more tricky there, and now even the Zelensky today, earlier today, had a post and warning the Russian citizen that be careful about our next attacks because we are going to attack. And what's generally Ukrainian is trying to do is trying to bring this war back inside bring back to the inside of the Russia because. And if you go to the Russia, it's very rare you can understand that's the war going on. While in Ukraine is everything is about the war, inside the Russia is not that much about that. So people do not focus too much on the war situation, even though just in the last months because of the economic situation, now the focuses are a little bit more. Now Ukrainian also trying to with the counterattack to the Russian borders or some attack inside the Russia to bring this attention more on the focus, especially attacking to the refineries and oil facility or energy facilities inside the Russia. Anyhow, situation are a little bit more under pressure right now, just like political situation. While in Iran war, we know that in Swiss talks started finally. JD Vance from United States, Abbas Araghchi and Ghalibaf from Iran, they went together, they talked. There were some just like fake news about that Iranian they left the negotiations because the ongoing tensions in the attack between the Israel and Hamas. However, what we know that inside the Iran there are some groups and parties that they don't like this deal. They don't want to see this to go further. That's why they are, which is mostly they're just like they're the parties connected mostly to the hardliner and which they are they have the very good relation with the Hamas as well. So it sounds like they're trying to with this how can I say to miss the negotiations with supporting the Hamas attacking to the Israel because they know if the Hamas attack to the Israel also they will attack back. And in the recent days, all the tensions that started after these talks starts after beginning of these talks or 60 days ceasefire, we know that the all attack that the Israelis had, they were all response to the attack that the Hamas and this group, this terrorist group had to the Israel. So it was as a response. That's why the last night, President Trump had a post, a tweet, or in a through social telling that if the next time the Hamas attack to the Israel, we're gonna attack back to the Iran. It's just like, and that was very hard response and response that just like I think that response put more pressure on the Iranian negotiators to negotiators to bring back them to the table. So that's why the negotiations continues right now. So the first day ended, we had some positive news from Abbas Araghchi says that okay, we got some points there. And still, just like I don't trust any of them until we see the real. Just like because Iranians say something else, Americans say something else. I don't really know. No one really knows what's happening there. Iranians says that we got some positive news. We get $6 million out of money, and but the $6 million, even if they got, they already spent this money because in recent months they had zero income and they were printing the money inside the country. So I don't think that they're gonna have any money Even if they got all the $6 billion cash, I don't think that they have any money to use it for anything else, because they already printed this money, gave it to the people. Anyhow, as just the salaries and stuff like that inside Iran. And yeah, the situation is there is like tricky. So for today, the second day will continue. So it sounds like for now it's going to be the end of this just like high level of the negotiations. After that, what we understand from the news, that after that technical groups will continue these negotiations, and they don't need to see the Ghalibaf and JD Vance to come together. Most probably Abbas Arakchi and Stephen Witkoff, they will continue these talks. Anyhow, this is the situation there. So the market somehow can be positive, at the same somehow can be negative. Still, that's why we can see the market risk is still so high. Looking at the bond deals, also we can understand this. Just like US 10 years bond deals, again above 4.50%. Japanese 10 years yields at 2.67% above that, showing that the risk premium in the market is still so high. And this risk premium can tell us that what's happening. After last week, Thursday, that the US market closed higher. Friday, it was a holiday. Today, market had a negative reaction, mostly to this ongoing talks and the geopolitical news somehow. Dow Jones was negative, slightly gained, and then they lost the momentum. Now Dow Jones and S&P 500 slightly negative, while tech companies, especially tech stocks, especially US Nasdaq 100 is slightly 0.1% higher. However, looking at the market, just you can see that VIX at 18.48, telling us that the market risk is still so high, even though it's slightly less than previous week, but still the higher risk in the market can tell us that we should be a little bit more careful about that. In Asian market, also situation almost the same. Tech-related companies and AI-related stocks, they are positive. Like in South Korea, Kospi almost 0.7%. In Japan, Nikkei is 1.9% higher. In China, stocks just like FTSE 50 is like slightly positive, but not much. But the other Asian stocks, they are negative. They are losing the momentum. In South Korea, the HS Sky Hinks, something like that. SK Hinks, if I don't mistake. They are amazing. SK Hinks, the AI related stocks. That got to just like become the biggest the biggest company as a market cap in South Korea. They just passed the Samsung, and just now we have a little bit bigger than the Samsung company in South Korea. Well, the company that Samsung was representing the South Korea is still representing the South Korean stock markets across the world in technology across the world. But sounds like we have to talk more about the Sky Hinks right now. And now they are the biggest company across the Korea. And yeah, this is the situation in the stock market, and that's why we should this telling us those stuffs all telling us we should be a little bit more careful. Looking at the commodity markets, we can see that the gold slightly positive after last week's down. Silver also same after just like with the positive news that they came from just like ongoing negotiations. At least they continue their negotiations. Crude oil is trading around WTI trading around $75-$76, and Brent oil between $79-$80. What we expect, I do expect slightly this week the crude oil to continue between $75-$78, slightly higher, and WTI between $78-$82, something this period of the numbers. I do expect this. For the gold and the silver, I'm positive for the week ahead for these prices. In the cryptocurrency market, still the pressure on the cryptocurrencies continues, even though if the Bitcoin is slightly higher today, about $64,000, Ethereum around 1,750, but still overall looking at the market, cryptocurrency market still under pressure, and still there are not much trust in the market about the currencies, ongoing currencies there. So this is about the cryptocurrencies. Be careful about that. I don't see any reason right now to say that okay, the market situations changed and we can be a little bit more positive about the cryptocurrencies. Looking at before continuing to the week ahead, let's review what happened generally last week. Last week we had mostly central banks meetings and inflation numbers from United Kingdom and Eurozone. That was the most important numbers that we had. Central bank's meeting started from Tuesday with the Japanese Central Bank BOJ and RBA, Reserve Bank of Australia. BOJ finally increased the rates by 0.25 basis point, the 0.25% or 25 basis point to 1%. That's the highest interest rate since 1994. For loan interest rates is increased to 1.25%. This is while the central bank in Japan, they lowered the buyback and buying the bonds in the market. So all this signs telling us that the central bank in Japan, the Japanese central bank or Bank of Japan, they're trying to have slightly more hawkish policies to support the yen. However, they didn't go through. I mean, still the yen is still under pressure, and they wanted to avoid of just doing anything in the FX market. But with this situation, I don't think that this all the policies that they had, they were just like enough to support the Japanese yen. Probably we need more reaction from the Japanese central bank or the government to support the yen, because weaker yen actually can put the pressure on the inflation, producer inflation, and that can increase again the prices there. So that's very hard to expect that they're gonna stay there. They have to do something. In Australia, Reserve Bank of Australia or RBA hold the rates at 4.35%. That was what the market was widely expecting, because RBA already hiked their rates recently in recent months, so it's already high. The hawkish policies there, and interest rate is not and inflation is not too high these days, while the labor market is under pressure. So Reserve Bank of Australia didn't have any other reason right now to continue the rate hike, so they hold the rates, and mostly they decided to wait and see what's going to happen. On Wednesday, sorry. On Wednesday, we had inflation numbers from United Kingdom before, and then before we talk about that about the Federal Reserve meeting. In United Kingdom, inflation stayed at 2.8% for CPI. That was annually. That was market. This is why the market was expecting to see the inflation at 3%. That tells us that the inflation is not too high in United Kingdom, higher than expected, higher than I mean the central bank's target, but didn't increase that much. In a Eurozone, CPI increased slightly from 3% to 3.2%, and core inflation, that's interesting, from 2.2% increased to 2.6%. The core inflation is excluding the energy prices, energy and food prices. Still, that increase can tell us that the inflation is really sticky in the Eurozone, but again, that cannot confirm that the European Central Bank can rate hike. Even though the Bank of America today earlier they had an article that maybe ECB can increase the rates. I don't think so, because European economy is really under pressure, and more high rates hike can put the real pressure on the European economy. And I don't think that they're going to go for that. And then we had a central bank meeting in the United States. Federal Reserve hold the rates as it was expected at 3.75%, no change there. But they increased their interest rate expectations for the next years. They lowered their labor unemployment rate to 4.3% for the for midterm. That's telling us generally that the market expectation was hawkish a little bit from the statement that they had at the talks. This week we will have in the week ahead we will have more talks and speak from the Federal Reserve members. That will be those speeches will be very important to understand what's happening in the in United States Federal Reserve. However, that was the first meeting that the Kevin Warsh attend as the Fed chair, or just like I wanted to say again to Fed Powell. Just like 8 years we were telling Fed Chair Powell. Anyhow, as the new Fed Chair, Kevin Warsh was the first meeting that he was attending, and we saw many changes there. First of all, it was the change that we had in the model of the statement. The statement was just like very shorter, right to the point, with no expectations or just like any guidelines for the further that what gonna be, what I mean what the Federal Reserve wants to do if that happen or that happen. Any guideline for the future outlook, just like what's happening right now and what they decided. Very short and right to the point. Even that we can say that just like even in the dot plots, because we had a dot plots, even for the dot plots also Fetcher Wash said that he didn't by himself, he didn't anticipate it in a dot plots, he didn't vote for anything, but just like he asked other members to participate in a dot plots. That's why the market still the attacked the just like was just like the market attention also was on a dot plots, but still market was just like, okay, now just like what's going to happen. What we can understand from the Warsh Fed is that he's trying to be more practical and see the market and the market reaction on the central bank and the market. What he says that I want to get the idea from the market. I don't want to give the idea to the market and lead the market. That was what he was. He said that I want to just like control the inflation and the labor market, not control the markets. That was very important point that we could understand from that. Anyhow, but generally market attacked market looked at that as a hawkish decision and the speeches that he had, especially in the press conferences. Then we had a central bank meeting in Brazil. In Brazil for the third time, for the third meeting in a row, they cut the rates by 25 basis points. Now we have interest rate at 14.25%. That still indicates that the interest rate is still high in Brazil, and even though they cut, but still the higher than expected because the inflation is between 3.5% and 4% for different kind of inflation. But at least we know that the that Brazilian central bank or BCP just so they changed their method of cutting their interest rates by or increase the rates by 50 basis point. Now they're trying to make it with the small pieces, with the smaller numbers, with the 25 basis point rate cut. And then Thursday, we had Swiss National Bank meeting, interest rate decision. They hold the rates at 0%. It was what the market was also expecting. Before talking about the BO, I have to say that the UK labor market also showed that unemployment rate lower at 4.9% compared with the previous month of 5%, while the labor market generally was good. So while the labor market generally was good and while the interest inflation was lowered, that's why we could see that Bank of England, BOE, also held the rate at 3.75%, while even though the two members, they vote for rate hike. Market was expecting one vote for rate hike. They had a two vote for rate hike. That's why instead of 8 members voting for holding the current rate, 7 members, they voted for the current to holding the current rate. And generally, the thing is that generally looking at the situation, we can say that okay, now the market was somehow hawkish about that, just like okay, that was a hawkish tone, but generally, I mean, you know, when you have not, you don't have the inflation that much higher, and the labor market is also doing somehow fine. You don't have any reason to hike the rate. So that was the market was expecting. Okay, we can see if that situation can continue. We can see rates cut even in the next meetings. And then on Friday, we had the central bank meeting in Russia. Also, the Russian central bank also cut the rates by 25 basis point, while the market was expecting 50 basis point rates cut. They cut the rates by 25 basis point. Earlier today, also we had the Chinese central bank, PBOC, People Bank of China, also held the rates at 3% and 3.5% with no change in the policies. Market also was expecting the same. We didn't expect anything else. This week later, we're gonna have two important numbers to watch. One, PMI numbers, and second is inflation numbers. Later today, we're gonna have inflation number from the Canada. I don't expect any surprise in Canadian inflation numbers, so not big changes there. Besides these two important numbers, inflation and PMI numbers, I have to say that during the week, we're gonna have too much speeches from Federal Reserve, from the Bank of England, from the Bank of the European Central Bank, and you should watch all of them. I mean, that would be very important, especially from the Fed speakers, that they're going to tell us what's happened mostly about the last week's Fed meeting. One more thing, I forgot to say on the geopolitical tensions, we know that the Chancellor in United Kingdom, I'm just like, why I'm forgetting the name? Kirsten Meyer, Most probably today he gonna resign. Most probably he didn't have any talk yet, but most probably gonna resign today. We had already posting from the Trump that it was that he was telling just like everyone that that's just like he's gonna resign today. Anyhow, we're gonna see probably most probably he's gonna resign today, and that gonna be he was the seventh prime minister chancellor after the 10 years that we had in the Brexit. That's crazy. In 10 years, they had a seventh prime minister. That can tell us that this country cannot make a long plan for the economy, for the politics. That's not a good news for the British economy, for the British policy. Anyhow, tomorrow we're gonna have the inflation numbers from Japanese Central Bank. BOG's inflation number can tell us that the core inflation most probably can ease to 1.5% from previous 2.8% as expected to see. And then we're gonna have the PMI numbers. This gonna be the that's just like primary numbers. So since this is primary numbers, we're gonna have the service and manufacturing PMIs at the same day. Final numbers, usually we are having the manufacturings on Mondays and then the service and composite on Wednesday, but the primers we're gonna have it all together on one day. So tomorrow PMI numbers will tell us mostly after this lower tensions, geopolitical tensions, slightly better expected movement in the service sector, especially. Generally, we are positive slightly about all the economies across the board for the PMI numbers, no matter the service and manufacturing. On Wednesday, we will have on Wednesday the most important numbers. Again, the speeches will be very, very important to watch. And UK US housing numbers, building permits, and the new home sales will be very important to watch. Despite the higher rates, I do expect slightly positive numbers there. Thursday, unemployment rate supposed to slightly ease to 4.4% from previous 4.5% in Australia. Then Thursday's most important numbers and the week's most important numbers will be the US inflation numbers, personal inflation, personal PC price index, and also personal income and spending. They will be the most important number of the week. I do expect to see core PC price index to stay unchanged at 3.3% or maybe even slightly ease to 3.2%, while the PC price index most probably around 3.8%, 3.7%. I don't expect to see the hotter inflation numbers. That's what I expect for the May. So no hotter inflation numbers most probably, and that can support the US stock market at the end of the week most probably. Personal income and spending also, both of them also expected to increase. Even though we have the first quarter's same numbers for the PC price index, income and spending for the first quarter, but the market will focus mostly on May number instead of the first quarter. And Friday, we're gonna have mostly we're gonna have the speeches. Mostly we're gonna have the speeches and US retail inventories, wholesale inventories and retail inventories. We're gonna have them. Anyhow, that's gonna be the most important numbers of the week ahead and our expectation. Looking at the charts, if we want to look at the charts and see what's happening there, VIX, as mentioned, VIX is moving between 18 point. Let me share my chart. Hello. Yep, here we go. As mentioned, weeks, the market risk is still moving between 18.40 and 18.60. This high level still, even though it's slightly lower than previous week, but still we can say that the level is high and the market risk is still higher. That's why we can see US dollar index is still increasing, above 100. And this higher risk can increase the demand for the dollar index and put the pressure, slightly stronger US dollar index, put the pressure on the gold and silver price. However, with the most positive, as much as we have a positive news from the Strait of Hormuz and ongoing negotiations between Iranian and American, that can be the positive for the gold and vice versa for the gold and silver. In the stock market, as mentioned, if looking at the bigger number, like for the indices, for the S&P 500, Nasdaq, and the Dow Jones, I'm sideways, natural with the downward tendency, but some specific stocks, tech and AI related stock can be positive during the week. But generally, I don't expect any big positive movement in the stock markets. In the energy market, WTI, I'd expect to see this during the week, as mentioned at the beginning, oil price to slightly increase because, like, yeah, the Strait of Hormuz is open, but before war, we had around 20 million barrels oil passing the strait. Now, in the best situation, we have around 10 million barrels. So still, there is a much lower. So anyhow, the situation is still tricky there. So while we need more demand in the market, as in the past 2-3 months, economies they use their inventories. So that's the tricky numbers. That's why I do expect to see the oil price slightly higher this week. And about the cryptocurrencies, I'm not still a positive, as mentioned. Maybe some up and down we can see in these areas, but especially technically, as long as it's trading under $66,000, I'm a negative. But fundamentally, we don't have any big cash flow inside the market, but we have cash flow outside the market especially from ETFs. That's why I don't see any bigger demand in the market and higher prices for them. That's what happened last week and what we're expecting to see in the week ahead. Hope it was useful for you. Talk to you tomorrow. Have a good day. Bye-bye.